All right, welcome and thank you for everyone for joining us for Impact Dashboard Live. We're going to be talking about our online impact model, Impact Dashboard. Uh, my name is Paul Shurin. I'm an economist with Impact Data Source, the creators of Impact Dashboard. And essentially, just to set the stage, Impact Dashboard is going to help you run the numbers on your economic development projects. So just to take a look at some screenshots here before we actually get into it, what are we talking about when we talk about running the numbers on an economic development projects? And to us, that really includes a couple different things. The first big one, and if we look on the left-hand side at the top of this graphic, we're going to be estimating the impact in terms of jobs. So we want to understand how many direct jobs would be created by this new company, for example, and then how does that generate some additional spin-off jobs based on that particular industry in the community. And then we're going to translate those economic impacts into additional revenues for the specific tax district. So just here on this page, we can see some information relating to a city and how much additional revenue they might receive over a 10-year period. And we've got some details also shown here, kind of just representing what types of revenues are we estimating in our model. So again, it's dependent a little bit on the tax structure of the local area, but you can see here we've got some sales taxes, property taxes, city-owned utility revenue, and a number of other sources of revenue. Then on the cost side, we're backing out some costs for the as this community growth happens, the city might have some additional costs associated with the project. So that's the type of information we're going to be generating. But also, we're going to allow economic developers to evaluate potential incentives and to boil it down to an ROI. So, for example, if a community is thinking about a job creation grant, or if they have to pay for some infrastructure that might be associated with the new project, and the city's going to cover the price of that, or even if it's the county, we can look at that incentive as an investment in the project, and we can calculate a rate of return and a payback period. So that's where we're going with this. We're going to take a look at an example as we go through things today. But before we go any further, let me just back up for a minute. Again, my name is Paul Shurin. I'm an economist with Impact Data Source. My partner, Jerry Walker, started the company in 1993. So as a consulting company, our company has over 25 years of experience. We're really specialized in economic and fiscal impact analysis, so supporting these economic developers and governments understand the impact from economic development projects. And so most of our studies that we look at are involving some sort of economic development agreement, and so it's important to kind of model that in as well. Now, we do consulting kind of on an individual basis. If a client needs a project evaluated, we can prepare a report. But we also offer a software solution too. That's Impact Dashboard. That's what we're going to be focusing on today. So Impact Dashboard, just kind of separating Impact Data Source, the company, from Impact Dashboard, the product. Impact Dashboard is a web-based app. We currently have over 100 clients using the model. Those are all cities or counties and economic development organizations. They represent kind of a wide spectrum of different types of organizations. So we have some cities that are under 10,000 in population. We have some large metro areas, multi-county regions, as well as kind of economic development organizations that kind of make the model available to all of their members for a particular area. I will say we are recording this video, and so if you have, if you want to get a copy of this, we'll send it out in an email, a link to the video. And if you have questions as we're going along, feel free on the GoToWebinar panel. You can ask questions in there, and we'll get to those as we go along. But I think the best way to walk through this is to actually run the numbers on an actual project. So let's take an example here of a new economic development project. Maybe it represents a regional headquarters for like a food distributor. Maybe they're going to do half office stuff and half food distributing activity, so it's kind of all in one. If we think about that, I've got some basic specs here for this particular project that we can run through. So it's a $70 million capital investment, excluding the land. That kind of comes in the form of $50 million to construct a building, $20 million in FF&E. They're going to hire, they've told us they're going to hire 240 workers with an average of $65,000 per year. Let's just assume that they're going to have 140 workers relocate immediately. This is coming from some outside of the area. And then they're going to phase in and ramp up to add another 100 during years 2 through 4. And in this case, we're going to even model a potential sales tax revenue for the city if the project's going to be able to generate 1.5 million in taxable sales here. And kind of as the final piece, what we're going to do is take a look at a potential tax abatement or job grant that we can plug in here and evaluate. So with just that information, kind of the typical basic information that you might have from a prospect, we're going to plug that into our model and see what that looks like. So I'm going to switch over to our model. I'll come back and talk a little bit more about the administrative aspects of Impact Dashboard and how we can look at all of our projects, run different scenarios. But for right now, I'm just going to plug this information into our model that we've discussed. So when we open up a brand new scenario, what we can do, we're going to be faced with a couple windows. There's 3 windows that we're going to have to get through before we can start entering in kind of the meat of things. The first one is really just asking us to give a scenario description. We can give it a particular title and type in a description. For the sake of time today, I'm not going to put this in, but anything you type here would go through and end up on our reports, which we'll look at later. Now we want to identify where the project is located. So for example, here in my model that I've set up for this demo, I've got just 2 different cities. I've got the city of Arlington and the city of Burleson. They both happen to be in Tarrant County. We're in Texas with this example. We've got 2 different school districts. It could be in Arlington ISD or it could be in Burleson ISD. And then we've got a hospital and college district, which just follows along with us being in Tarrant County. So we identify specifically where the project is located. The cool thing about the way this all comes together for a user, Impact Data Source is going to build in all of the tax rates and other information that need to be included so that when an economic developer wants to run a project, all they need to enter to Impact Dashboard is the project specific information. Impact Data Source and through our support, we're going to make sure that you have all of the latest tax rates and other parameters built into your model. So that's what you're selecting here. You're going to select exactly where the project is located in terms of tax districts. If you want to, you can also put an address here. I'm going to skip over that piece just in the interest of time as well. If I hit next, the third window that pops up here as we're starting a brand new project is the scenario industry. So we want to know what's the NAICS code or what industry is this for our a project that we're evaluating. I mentioned this is a regional headquarters. So if I start just typing, I don't remember the NAICS code off the top of my head, but if I start typing regional into our window here, we can find our corporate subsidiary and regional managing offices. The NAICS code, it shows us right there. And as I select that, it pulls in our multiplier. So what's happening here is we're identifying the industry, and Impact Dashboard is going to pull in the appropriate multipliers to be used in this analysis. We're using RIMS2 multipliers in this case. So if we were to interpret this, we look at a type 2 employment multiplier of 1.76. That means that for every direct job that's created by this company, there's going to be 1.76 total jobs created. So that's the one direct job and then 0.76 spin-off jobs. When I say spin-off, and we use the term spin-off throughout the app just because it's a little bit shorter, when we say spin-off, what we mean is indirect and induced. Those are the indirect being kind of business-to-business expenditures that might go on with this project, and the induced represents the consumer to business expenditures that might happen as a result of new workers spending some of their money in the community. So I'm going to hit close on this, and now we drop into our full scenario here, and we can see all of our inputs down the left-hand side, and we see a dashboard ready to start calculating on the right-hand side. If we need to get back to any of those tiles we just looked at, we can click right up here. The description, location, and industry are here for us to modify those or edit them at any point we want. Now, in our example, we had put in, we had been told that there were going to be 140 jobs initially, and then they were going to add 100 over the next couple years. So I'm going to put in our hiring schedule just like this, so we get to 240 total jobs. And just with that little bit of information, you can see everything is started to calculate. For example, here are our jobs. It's showing us that there are 240 direct and about 180 spin-offs, so we've got about 420 in total. If we hit continue over here on this left-hand side, we can get to our next input. This is a question about workers relocating to the area. I won't spend a lot of time on it today, but this is a pretty critical input as we think about where the workers might come from that are going to fill these 240 positions. If it's a project that you expect to employ a lot of local folks that might already live in Arlington, or if they're going to commute in from outside, because there's a lot of folks in the labor force area that might commute in, you would expect the amount to relocate to be relatively low. In our case, we were told that actually they were going to relocate a bunch, and so maybe this is a little bit higher than normal, so we'll bump this up a little bit and maybe call it 20%. So out of the 240 workers, we're going to say that 20% of them might actually relocate to our city. As we hit continue here, we go to the salaries. We had been told they were going to be $65,000 per year. If I type in the value in year one, we can see that it increases and fills in the rest of these based on this 2% annual increase. We can modify our 2% annual increase if we think it's going to be more like 3%. We can also see we have the ability to access any of these values over the full 10-year period. We're looking at this analysis over 10 years right now, so we can view that as needed. We keep it just to the first 5 years to keep things kind of tight on our screen. If we hit the next section here, this is our capital investment. We had been told that there was going to be $50 million investment in buildings and other real property improvements. And FF&E, they were going to invest $20 million, not 2, but 20 million. So we got a total capital investment now of $70 million. And as we've entered this information, we can see the model is already calculating some taxes for us all throughout the model here. If I hit continue, the next input asks about building permits and fees. I'm not sure about that information yet, so I'm just going to skip it so we can leave things blank if we don't know and we want to come back to them later perhaps. We probably expect maybe some building permits and fees that might be paid on this type of project, but we'll skip it for right now. The next input is asking for taxable inventories. This is kind of a Texas-based model, so inventories are still subject to tax in Texas. We have a lot of clients who are not in Texas, and they might be in a state where inventories aren't subject to tax at all, in which case, for a client with that type of tax structure, you wouldn't see this type of input. Since it applies as a possibility in Texas, you do see the input. In our case, we're going to skip it because we don't have any information about taxable inventories at this point. The last two inputs here before we start looking at some other pages are taxable purchases and taxable sales. We were told about $1.5 million in taxable sales at the local level. Let's get that 1.5. And we'll put that in again where we can enter a value in year one and let it increase over time. So now we've got all our information entered, or at least the information that we have. We can see on the right-hand side, we've got things calculating already for the city of Arlington. We can see the total number of jobs, the average salaries, the capital investment, and we can see this information about benefits, costs, and net benefits. This is the additional revenue that the project's going to generate for the city of Arlington, as well as the costs that they might incur, and then ultimately the net benefits shown in orange, in this orange line of 5.2 million over the 10-year period. If we're curious what's happening for the county or maybe any of these other tax districts, we can click right over to them. We can see in the case of the county, they're going to get about $1.5 million. The school district's going to get about $2.2 million on the net here. Now, the next thing I want to look at really is our public support page. So for so many of our clients, they're going to be evaluating incentives for a particular deal. And so we want to show, or we want to be able to account for potential incentives that might be offered. So here, let's just imagine that the city was going to offer a property tax abatement of 100% on that new building for the first 5 years. And so as you can see, I'm on the city tab, and I'm in this property tax abatement section, and I can enter in the abatement percentage over time for the buildings. I could similarly abate the FF&E if we wanted to do that as well, but we're not going to do that in this case. Over here on the right-hand side, we're calculating this abatement as we go. So the dark blue bars are just showing us the total property tax that would be collected by the city, barring any abatement. So 4.2, let's call it, $1 million in property taxes over the next 10 years. That's if we were to kind of stack these dark blue bars all on top of each other, it would add up to 4.2 million. Now the abatement, that's the 100% on the building for 5 years. That means the city is going to be giving up these amounts here. So the value of that abatement is about 1.6 or 1.7 million. So on a net basis, the net collections that the city is going to receive represented here about $2.5 million. Now this is kind of a cool graph so we can see what happens over the time, but if we want to see the hard numbers, we can get to that too. Just by clicking on this table view, we can get to the table representation as well. Now, property tax abatement is pretty common. If depending on the type of project, you might actually be doing maybe like a 380 agreement where technically it's a rebate. If we want to change the language around that, we can do that. So maybe we want to call it a property tax rebate. From our perspective, the math is going to be the same. The city on the net basis is still going to get only $2.5 million, but we want to make our language correct here, so we see a rebate now. The other type of incentives that we could put in here, we have a sales tax rebate. I won't get into that. But the other one that I do want to talk about is a non-tax incentive. So this could be a non-tax incentive might be the case where the city's offering to pay for some infrastructure improvements, or maybe they are going to give a good old job creation grant or something like that. Let's just imagine maybe that the site needs some preparation and the city's willing to chip in on that, and that site work is going to cost maybe $750,000. So if I plug in $750,000 here, we think of that as this non-tax incentive. It's actually thought of as an investment in the project. And we're going to compare to that investment to the return on the investment, which is represented here by this orange line. This is our net benefit, that's the cumulative net benefit that's paid to the city. So there's additional revenues that the city is going to get even after accounting for that tax abatement. So in this case, if we look at this, we see $750,000 against our net benefits, which are just about $3.5 million in this case, it looks like. And as we run the numbers on that, we can see we hit a payback period of 2.5 years and about a 47% average annual rate of return. The graph here, we're showing the incentive amount and a reference line showing us that $750,000 across, so that we can see the intersection point here is right between years 2 and 3, and that's where we see our 2.5 years. Now, we don't have to, we can actually specify the incentive really any way we'd like. So right now we see where we're able to enter in an amount for any year and calculate these rate of return. If we wanted to kind of set some limits to things, or maybe we have a policy that says we'll consider an incentive for this type of headquarters project, but we have to get paid back in 3 years, we can do that. We don't know what the incentive amount is, but we can fix the payback period to 3 years and let the model tell us what that incentive would be. The amount of that incentive would be about $827,000 in this case to hit the exact on a 3-year payback period. As you can see here, we could really specify any one of these things. For example, we might want to do a $4,000 per job incentive, in which case about $960,000 in this case, because we had the 240 jobs. Those jobs were phased in over time, so we can see now our incentive being paid out over 4 years. That gives us a payback period of 3.8 years. Let's pretend that that's what we want to go with. So we've plugged in all of the information about the project that we have, the jobs, the salaries, the capital investment, the NAICS code, and then we've modeled the type of incentives that we're considering. And now we can go to our report page and see a couple different report options to see how we might present this to our different stakeholders. So first, when we go to the report page, we have a set of summary reports. Right now, we're looking at the summary report for the city of Arlington, but we can generate summary reports for each of the tax districts. In this case, these summary reports are a one-page infographic style report that try to summarize all the information that we need about this project. So in our case here, we can see some of the information that we've calculated along the way. For example, we can see our 240 direct jobs creating the 182 spin-off jobs. We can see our average salaries that we've entered and the spin-off salaries. And we see that $70 million in capital investment repeated. And we also have a new box here that says residential development. This is helping us identify the number of households, worker households that might relocate to the city for this project. And so here we're actually showing a pretty strong number of worker households that might relocate. This one having to do with the company relocating initially, those 140, let's say. But we've got 62 that are actually coming into the city of Arlington. And then that's going to drive some residential demand, as we see here, that they might construct maybe 9 new homes. Now, graphically, we can see our benefits, costs, and net benefits are listed out here again. Our net benefits are right around 3.5 million. We can see they're actually depressed a little bit in the first 5 years, and then they jump up in years 6 through 10. This is a function of that real property tax abatement that we've modeled in here. So everything kind of gets layered in. As we scroll down on the lower half of this one-page report, we can see we've got net benefits of $3.5 million. That's that number from above. But now we go into more detail to show you how we came up with $5.2 million in benefits and $1.6 million in costs. So here our benefits are shown as some sales taxes, some real property taxes. Actually, there's an asterisk here. This is where it tells us that the actual amount included is $1.8 million. But that excludes this property tax rebate that we've considered of $1.6 million. So that in this case, the property tax rebate is reducing our benefits that we see. On the cost side, we can see we've got the cost to provide city-owned utilities because we're accounting for our revenue on utility revenue coming in. And then we also have a cost of government services. That's the costs, kind of the marginal cost we think about for a particular city or a county or even a school district to provide services to these new households. So as you have more residential activity, more workers living there, or more business activity, you might expect these government costs to increase. And so that's what we're trying to capture here. All of that it gets into the weeds a little bit, but we can talk about how we estimate that. We look at the city's actual budget, looking at what services they provide, what sources of revenue they receive, and we actually come up with those and in a good bit of detail so that we can index it when we're actually evaluating a project that's going to have an increase in employment or increase in households. In the gray box on the right-hand side of this one-pager, we've got the incentive analysis. Again, just summarizing the $4,000 per job, indicating our payback period of 3.8 years and the total amount of net benefits over the time period of 3.6 or $3.5 million. Now, again, this is just acknowledging that the 3.5 or $3.6 million is just for the city. The county, the school district, and the other districts are actually benefiting from this project quite a bit as well. If we want to, again, we can click here for information on the county and get a one-pager for them as well. The detailed report, we have another option here that we see. It's a detailed report. It's more of the traditional style report you would see with a narrative and some additional tables. So if we were to print off the summary report, the first report we looked at, obviously that's a one-pager. Here, the detailed report is going to be maybe 15 to 20 pages, depending on all of the different elements we have included. We've got some tables here just walking through the economic impact. We can see how we went from the capital investment to get taxable property. In this table here, you have the ability as a user to modify some of these assumptions around how much of the $50 million investment might be added to the tax rolls. It may not be dollar for dollar like it is here. We can also see the building is increasing in value over time. We've got a real property appreciation assumption there that's reflected. The FF&E, we can see initially invested was $20 million, and then over time that taxable value declines, and that we're accounting for some depreciation, all things that you can adjust. In this detailed report, we're going to show you the impacts across the board. So here, this fiscal impact overview, we're showing you the impact from the city, the county, the school district, and the other taxing districts. So we can see the benefits, costs, and net benefits in each of those cases. As I continue to scroll down, we also get a summary of our public support. So in this case, we only really had the city participating in an incentive, but we can see that the property tax incentive was valued at roughly 1.6 million, and then the non-tax incentive was about 960,000. So in total, the total incentive package, so to speak, is about $2.6 million in this case. If other districts participated, we could see some amounts being chipped in there as well. Now, in this detailed report, as I continue to scroll down, we're going to see detailed information on each one of the tax districts. So first up is the city, and we can see this 3.5 or $3.6 million number. This is the table that we've seen before. We provide a little bit more detail to help you split out whether or not the particular benefit or cost is coming from the project itself, or whether it's coming from the workers, or truly some assumptions about the workers. So in this case, we've got 3.1 million roughly from the project, and we've got 400,000 from the workers. So majority or a big chunk of the overall net benefit is really a function of the workers, or excuse me, of the project, sorry. As I scroll down, we can see a lot of these other tables that we've seen before, but now they're included in the detailed report. We're showing you the tax incentives and other pieces of information here. And then we go into the county and all of the other districts. We also have a little bit of a methodology section at the end, along with an appendix that shows us these values of tax abatements and so forth. If we go back to our summary report, we can take a look here. We can print these off and save them as PDFs just as easy as clicking this button and then hitting save in the resulting window. So you can take these reports with you. They look good on the screen, but they also look good as a PDF. I don't want to go into too much detail, but I will talk about this gear icon that you see up here, the settings. If I click on this, this is where I can make some of the changes that we're kind of discussing. So the idea of the real property appreciation, maybe currently it's 2%, maybe we want to make it 0, so if there's no increase in those values over time. We can make a change like that, and we can see the default value is kind of here as a reminder. But now if we go back to our report, for example, if we look at the detailed report, we would see our taxable value of property fixed at $50 million over the 10-year period. The other type of change we might want to make, if I click on the settings, might be the length of the analysis. So let's say that we wanted to run this out over 15 years. If we want to do that, it's just as easy as changing the scenario length and then clicking back to our other pages. And we can see that now all of our calculations throughout the entire app have stretched out to the full 15-year period. We have the ability to apply tax abatements or rebates throughout that time period as well. If we go back, we could even potentially have our job creation ramp up over the full 15-year period. So you can do it as your first thing or the last thing, but changing the length of the analysis can be done really at any time to run those different scenarios. So we've been in this scenario workspace the entire time running some numbers, but let me just kind of show you the rest of Impact Dashboard as you kind of administer some of these things and run different scenarios. So I'm going to hit close the scenario here, and we're going to go back to where we started when I hit add scenario. And this is our control center for Project Zip. And so far I've got this scenario 1, and we're seeing the results kind of in a snapshot here. It's the $5.4 million over 15 years, 240 direct jobs. We have the ability, let's say that we wanted to think of this project, but maybe that they really weren't going to do the additional 100 jobs. So it's really just the initial 140. We could go in and edit scenario 1 if we wanted to and change that to be anything we want. But a better option would be to click on this button here to copy that scenario and then just modify the copy to represent the 100 jobs. Or excuse me, the fact that we wouldn't hire the additional 100 jobs. So sticking with just the original 140. So I'm going to close out of that and change the jobs to get rid of these additional jobs through years 4. So now we've just got the 140, and we can see now still over our net benefits are still pretty strong, but it's 5.2 million now. The benefit of those additional workers is no longer included. So if I go back now, we can look, and I have 2 different scenarios in our control center, and you can create as many scenarios as you need. And we're looking at this, so we're previewing this copy of scenario 1. That's not a really good name, so let's change that and call it 140 jobs as our name there. And in this case, if we preview that, we can see we've got our 140, only 246 in total, and net benefits were 5.2 million. If we want to go back and remind ourselves what the numbers were for that initial one, we can do that just by clicking here and see, okay, that was a little closer to 5.5 million when we had 422 total jobs. As you can see, we can rename, copy, or delete any of these scenarios. We also have the ability to tag this project. So if we wanted to say, hey, actually this is for fiscal year 2019, let me just add that tag here so that we can keep things organized as we look at all of our projects. we can do that. And we can also upload documents. So as you can see here, if we want to keep some either like a draft economic development agreement or maybe some information that the company shared with you, if you want to upload that and save it to the system to keep it associated with Project Zip, you can do that all from here. So when we started this, we were all the way in kind of looking at the scenario workspace at the kind of the most detailed level we could go. Then here, as we're looking at this is the project control center for Project Zip. And so we've stepped out one step. So we started in at the scenario, now we're at the control center. And now let's go back and look at all of our projects. So over here, I can click on our menu that pops out to look at all of our projects. And we can see on this screen, we have a number of tiles, and each tile represents a project. So we were just in Zip, as you see here, and we applied that tag. You can see the fiscal year 2019 tag is applied. These tiles, as I say, they represent a project, and they give you that information about it. We can rename projects as we need to just by clicking there, and we can move projects if we want to kind of categorize these. So right now we're on a tab called Active, but we do have the ability to kind of identify some outcomes. So we have won, lost, and archive, and if we want to move these. So if a project kind of goes dormant, they might end up in the archive. If you want to celebrate a win, obviously you can put them in that category for won projects. The other option, obviously, is to delete a project if we no longer need it at all. You really don't need to do that too often, probably, but if you just want to kind of get rid of something that you accidentally created, you can certainly do that as well. To create a brand new project, it's just as easy as clicking this button and then giving it a name. I'm not going to do that, but we can see that that's pretty straightforward to do. We're looking at this in the tile view. We can also look at it as a list. If we feel more comfortable looking at these projects as a list, it looks just like this. Now, the other thing that we can do if we're trying to search for projects is search just kind of on some words. So maybe we're trying to find watercress, but we can't remember where it was or we didn't see it at first. We can just start searching by text. The other thing we can do is filter by tag. So if we wanted to find all of our 2019 projects and we wanted to find all of the ones that were in the downtown, we can zero in on all of those deals. These other categories, so we're on the active one, but if you go to these others, we have a one category, no projects in our lost category, so that's good. Then we've got one here in our archive. If we want to just get a full listing of all the projects you're trying to find out what's what, we can do that here as well. All over here, we can jump to the different categories of projects, or we're going to keep a list of your more recent projects that you've worked on. In your My Account, so each user would have a My Account page here. This is where you'd be able to upload your logo and so kind of give it your branding. You can also kind of flip the color scheme too if you want to kind of follow a different color scheme. So far everything's kind of been blue based on this logo, but you could change and maybe have a green look or a red look as well. Within this My Account settings, you can also administer tags. So if you have a typo in your tag, you could delete them. And then we can also manage TIF districts here too. I won't go into TIF districts, we'll save that for another day. But ultimately, that's a really quick overview of what you can do with Impact Dashboard. As I say, most of our clients are evaluating economic development deals and trying to boil it down to an ROI and quantify some abatement numbers. And that's what Impact Dashboard can help you do. I haven't seen any questions come in yet. If you do have questions, you feel free to enter those in now. I'll give you a minute to type in anything. If you have a question, you can certainly follow up with us directly. You can reach out to me at paul@impactdatasource.com. So it's pretty simple, paul@impactdatasource.com. Just some typical questions that we often get might be around how we charge for Impact Dashboard. Essentially, Impact Dashboard is an annual subscription, and we typically, our clients are going to be economic developers or cities. We don't work with, like a company or a consulting business or something like that for one-off analyses. The idea is that an economic development organization is going to use this throughout the year to run all the projects that they might come across and kind of use this consistent manner and present to their board, to their city council. And so that's one of the big features there, is this level of consistency. The other thing, in terms of the annual fee, you have access to us, to Impact Data Source and the economists, to be able to provide support or training. So ultimately, you have unlimited training and support. What typically happens, we'll build the model, we'll customize, enter in all of the tax rates and other parameters that we need to model your local tax structure. And then we'll make that available to you, and we'll schedule a training. We'll do a GoToMeeting screen share and walk through your actual model and talk through how you might be using it in your city. And then we're available as problems come up or as questions come up. So if you've got a presentation and you want to just make sure you understand all of the numbers you're about to go present to your board or city council, we can kind of go over that with you. Maybe you've run an analysis and you've got, some number that looks too big or some number that looks too small. We can jump in there and take a look at it with you. So unlimited support from that regard by email or phone. I know sometimes when you're working through these projects, you're working on it when you're working on it, so it's nice to be able to give us a call and get the help when you need it. Still don't see any questions, so I'm going to wrap it up, but thanks again for everyone joining us. We're going to send you a video of this webinar, and again, feel free to reach out if you have any questions. Thanks so much.